Good afternoon and welcome, welcome, welcome. Today we are going to be talking about business budgeting with my favorite business budgeting tax guru, Pastor K. I call her Pastor K. K. Powell. And today we are going to learn about the 7 components to a good business budget. And with that, Pastor K, take it away.
Well, hello, everyone. Good to see you again. I'm glad to come back. Thank you, Selena, for inviting me to talk to your clients and talk to your customers about how to create a business budget. You know, it's funny because it is so important, and we are so concerned about our community and small businesses and making absolutely sure that you are sound, that you are successful. Until we said, what can we do? And they said, okay, let's talk to them about creating a business budget. So let's start off with this. Every penny counts. If you're a business owner, you must plan and track every dollar and cent every month, not once in a while, not at the end of the year, every month. That is the only way that you can make sure that every opportunity that you have to be successful, whether you need to cut costs, expand costs, venture out, you've got to track your money. Every penny counts. How do you do that? You have to create a budget. It's the only way to see if you're spending your money the way you ought to be, in the right places. Not sure where to start? Well, guess what? We are here to help. We are here to give you the 7 components of a successful budget. Now, what is a business budget before we start? The business budget details a plan that outlines where you're going to spend your money and how you expect your money to come in. What you have to do as a business owner is to give every dollar a job. That's right. You need to track and know where every penny is spent. That's the only way that you can find out if your business is successful, if you need to redo your plan, if you need to figure out what's going on. You've got to give every dollar a job, and you've got to figure out where it's going to go. How are you going to do that? Again, you've got to develop a budget. What will a budget do? It's going to help you forecast what money you expect to learn. So earn what your money you're gonna forecast what you expect to earn. You're going to plan how you're going to spend it, and then you're going to see the difference between your plan and reality. So what I find out is when I'm doing taxes and somebody said, I made 170,000. And then I don't know what happened. And I spent this because you didn't track your money. You've got to track your money. So what makes a good budget, y'all? As Selena says, we have 7 components. Every good budget has 7 good components, and you need to write this down. Get your pen, get your pencil, or get your phone and on your little note. But I'm going to help you. And please, don't let me talk about this and then at the end of the year, you didn't apply this. I want you to apply it. It's not too late. You can still do this. So the number one thing, now you're going to have a budget. You're putting it together. You've got to make sure you're flexible. You've got to make sure that you understand every cent, everything that's going on, and you have to make changes, okay? So the number one is you're going to estimate your revenue, your estimated revenue. How do you do that? Okay, so I sit down. This is what I do when I have a budget meeting. This is what I do every month. Now, people, I walk the talk. I've been doing this for years. I have always done this. I did it on paper, and then I did it electronically. But what I do is I estimate what my revenue is going to look like. If you got goods that you have to sell, estimate how it's going to be sold. If you have services, if it's the peak or it's a slow, whatever it is for that month, you got to estimate. Now, for instance, say, well, I don't know. I'm a brand new person. I'm a startup. I don't know what it's going to be. Well, then you're going to have to look at industry and see what the average is. If you are repeat, like you've had other years, then you're going to look, how did I do in January? Okay, in January, I made $10,000. So you're going to estimate. This is how you're going to start your budget, you guys. Your revenue, your income. You're going to estimate that you're going to bring 10,000 in. You're going to make 10,000 from either selling goods I'm just using that as a number. Don't you like that number 10,000? I do. 10,000 cool. Like, 10,000, you're not doing too bad. Okay, so you're going to estimate 10,000 as a startup, as this is what I'm going to make for January. I'm just using January or whatever. So you're going to estimate your costs based on prior year knowledge, experience, or based on the industry average. And you can research and find out what that is. Don't tell me I don't know what the industry average is. Come on, y'all, do some research and find out what, if they're a barber, what the average barber makes a month. So that's not hard to find out. So the number two thing you're going to do is, now you got your revenue, what you think is going to come in and how it's going to come in from every source, all sources, okay, your estimated revenue. The second thing is going to be your fixed costs. What are your fixed costs? So I hope I'm not going too fast and that you are following me, but we don't want to be boring and I don't want to put you to sleep. So I'm going to just keep this train moving. So your fixed costs, what are
Hey,
your
I'm doing the
fixed costs?
broadcast with
Your
Pastor because I
fixed
have to party
cost is
today.
very, very important. That's where you're going to
Hello?
say, okay, if I have a place, my fixed cost would be my rent. If I insurance, utilities, those are fixed costs. Every month you got to pay $2,000 a month for rent. Every month you got to pay $50, $60 for insurance. What kind of insurance you're going to have? You may have air and emissions insurance. You may have some kind of client insurance, whatever it is. Those fixed costs every month, you need to look in there. What other kind of fixed costs? Utilities, you know, you're going to have rent. I mean, you're going to have SMUD or whatever your utilities are going to be. You're going to look at bookkeeping services, payroll services. Now, if you're a good business and you really want to make it, you're going to have some bookkeeping services and you're going to have some payroll services, one or the other or both. But if people do their own thing, you can find, you could do it cheap, but you just have to do it on a regular. Maybe you're leasing some equipment. That's a monthly cost. Bank fees. If your bank says I charge $12, hey, you track every dollar. You don't be, well, that says $12. Track every dollar. A good business person will track every dollar. You got a plan and you got to track your dollars. So we got our fixed costs, right? I'm just giving you examples. Maybe it's a car payment, not your personal car payment, but maybe it's a car payment like you have a van or something and you provide those services. Those are fixed costs. So, okay, you're going to track every dollar. You're going to know what it is. So we did number one, you're going to estimate every revenue, every penny, and now you're going to track your dollars. Those are two things. Now, a reason why I'm doing this is because it's important. Pastor or Kay, you're just moving fast. Well, no, I'm giving you an opportunity, but this is not hard. So just imagine your first line is income. Now you're going to do expenses. The first thing you're going to do is list all your fixed costs. Now we're going to do number three. Number three, in fixed costs, it could be payroll. For instance, if you're paying a bartender or you're paying somebody, not talking about your payroll, you have clients, you have employees that work for you, okay? You may need to have a fixed cost for there. You have somebody that works for you, then you want to track that. Okay, number three. Number three is your variable cost. Now that's interesting, variable costs. So variable costs could change. So say in January, you have a certain cost, but in February, that's your time where you're going to do, like, maybe you're going to do some pop-ups. You're going to do some extra stuff. So the cost is going to increase. So you need to count that in. You don't count, if you got $1,000 in supplies, but in February, because you have three pop-ups is going to cost 2,000, then you have to change your budget to show the additional. And you know what I do is I usually identify what they are. So next year, if I need to know, I'll say, oh, that's why that is. So you want to put like whatever your supplies is. If it's increased, you want to put the increase. If you have credit card fees that all of a sudden last month it was this and that, you want to put, if you have to go, say the pop-up, you've got to travel to Atlanta. That was fun, huh? Travel to Atlanta to do some pop-ups, okay? So you're going to include travel fee as a variable fee. So in the month of February, your budget is going to look different than the month in January, because now in February you've got your fixed costs, but you have some variable costs that you didn't have in January. Those variable costs could be different every month. It could be a month, like for instance, March could be my registration on my van is due for my business, and I didn't have that. Oh, that's good. I'm glad you're showing the outline. So Selena is putting together like a little outline based on what we're talking about. And that's what I use, Selena, Excel. I am just a plain old Excel girl, and I took some little classes, and I do my little Excel, and so that's great. The way you're doing it is where you're posting it, where you're looking at this, and then you're looking at what it's supposed to be. So Selena, you so smart. Anyway, y'all better know Black small business care about you because they're bringing this to you as a tool to help you be successful. So not as a charge. So your variable cost. So now we're going to go to the next one. The next one is number 4. So we're doing the 7 components of a good budget. So number 4 is one-off costs, or I call them one-time costs. So for instance, this is like something different your business might not do. Maybe we went to January, February. So March, you're moving. You're going to be moving to another business or another location. So you're going to include whatever those costs is for moving, a startup cost. Okay, we're going to move to a bigger office. It's going to cost me 4 or 5 more thousand. You're going to include that in there in your budget. So any of that month, something happens. Maybe you have to make a big purchase. I love it. Keep going, Selena. Maybe you have to make a big purchase in that. Maybe you have to buy equipment. Maybe you have to buy furniture. Maybe you have to buy software coming in. So all of a sudden, or maybe you got to launch something. So it's a one-time cost. Yes, there you go. Oh yeah, you doing fantastic. Woo-hoo, set that budget, girl. That's what I'm talking about. So here we go. Selena is setting the budget. She's giving you. There's nothing better than to see it. I could talk about it all I want, but what she's doing is she's showing you how to set up this budget. So you're gonna have an Excel sheet. Come on, y'all. If you don't have an Excel sheet, go ahead and use a piece of paper. I use Excel because it'll add up, and I know that I can set a formula in there, and that might cost. So there you go. So you're gonna set. So look at Selena. She's setting it. She's doing some categories. She estimated the revenue. So Selena, what you're gonna do is put a line between estimated revenue. You're gonna add a line and fixed costs. Add a line between there. Blank line. Okay, now the fixed cost. So we're gonna say, let's say the rent is we're gonna say the rent is 1,500. Okay, and then we're gonna say insurance is 300. Let's say utilities is 200. Bookkeeping 125. Payroll 125, and then we're going to go to credit card. So credit card fees, say $50. Now we're doing the month of February, so that means that this month, okay, yeah, there you go. All right, so we're going to go ahead and leave those. We're going to put on the one-time cost, you're going to put equipment under there. But we're just going to leave those blank because we're going to show what a regular budget looks like when there's no other extra. So the next thing you're going to do is, okay, that's great. Okay, so now we're going to do number 5. Number 5 is cash flow. Now, cash flow is basically cash that you need to pay things that, for instance, and this is old fashioned actually, because cash flow has changed the way we do business. So cash flow might be if you're traveling somewhere and you need some money to pay traveling expenses, or if you need a petty cash, if you need to pay like every day, you got to use some petty cash. That's what cash flow would be. It would also, nowadays you can use your cash app. You have other things you don't actually, when cash flow does, you can write checks. So you guys remember in accounting that cash means credit card, it means checks, it means cash app, different sources, Square, Venmo, Zelle. So that is where you want to know if you think that you need, for instance, a certain amount of cash to give to. So Selena, let's put under cash flow, let's put like $100. So every month you need like $100 cash flow. And so then what we're going to do is we're going to see what your profit is. So the bottom line is your net income, net or profit. So the profit is the income the revenue minus the expenses. Now you'll have to put a you'll have to put a line. Yeah, you got to total that. You know what you're doing. Okay, and then you're gonna have to subtract that amount from the revenue. So how does that look, you guys? So there you go. When you see that the net is, what is it? I can't see too good. I'll try to make that bigger. 7,000 and something. Okay, that's your profit. Now, people, you are going to decide in your profit how much you're going to pay yourself. So this is a small business entrepreneur. You've got to do this. You don't start paying yourself until you see what the bottom line is. So now you look at the bottom line. Is those numbers right? Okay. Now you're going to look at the bottom line and you're going to say, all right, there's a couple things I need to do. First of all, I need a savings. Okay, there's your profit. Now you need a savings. Okay, so most of the time, what is the rule? At least 10%. Okay, like you're gonna throw in the savings. All right, and then you're gonna look at putting in something for next month. So you're gonna think, okay, do I have a startup for next month? How much I need? So you already see that you need like 2,000 and something for next month. So you're not going to spend every dollar and then start up right there. Now you're going to say what's left and what do I pay myself? So it looks like with what that is going on, you'll be paying yourself maybe about 3,000. Yeah. So then you can decide on that. That's your money to play with. That's your real net profit after all of that. And then you're going to say, I can pay myself this money. And then the other thing is, so I've given you guys these components and how to pay yourself. Isn't that interesting? Because you didn't know I was going to slip that in there. The slip that in there is how do I pay myself so that I don't overexpend myself. Now there are some there you go. There are some budget people that say, you know what I would do? If you have any, you got your savings. Now your savings is just, what is your savings for? You can identify. Is it for future expansion of your business? Is it for innovative things? Is it for emergencies? You determine where your savings is. Some people say, well, maybe I want to expand. There you go. Thank you. I want to do some other things. So every month's going to look different every month. Oh, another thing. I'm sorry, Selena. The other thing is taxes. We need to insert before we get to pay yourself. Yeah, insert that column, and that's going to be taxes. So, and actually, probably taxes comes before savings and whatever. Actually, it would be before each one of those, before savings. Yeah, and so how do you determine how much to save for taxes? I have a ton of clients. Lord have mercy, you guys, I love y'all. But I have tons of clients that ain't ready for the tax season because they didn't save for taxes. Now, you know that taxes are, if you are self-employed, there's a 15.4% tax you have to pay for self-employment tax, plus whatever tax bracket you're in. So you think about it, if you even did 25%, and really 35 would be ideal. But say you did 25%. If you're doing over 50, 60,000, then you're in the 22% tax bracket plus 15.4, 15.3 for Social Security and unemployment. So we'll do 25% of whatever your gross. I'm sorry, your net. 25% of your net. So I don't know if we can figure that out, but you're going to also include that as well before you pay yourself. Now you really have the bottom line and you can pay yourself. And let me tell you, if your bottom line comes out, sometimes you have to sacrifice. There are many times when you have to, especially new businesses, you don't get an income. You pay your bills and you keep the money because you can't liquidate your funds down to zero. That's poor business management. So there may be times when you say, man, you're not going to get anything. I mean, if I was starting a business, I would look at my first year really as probably something where I'm going to have to keep putting the money back in, keep putting the money back in, because I'm going to look at my budget. I'm going to look and say, I need equipment this month. I need to travel this month. I need to do something else. See, she's fixing the numbers so we can see what it actually looks like at the bottom line. And you're going to plan. You need to plan your taxes. You need to have a little savings, and you need to figure out how it's going to work. This is like a real true business. Now, a lot of people say, well, why should I go on business? Because these numbers are going to change, y'all. It's going to get better. I did something, but those numbers are going to get better. But it's your business. It's a foundation. You're setting up your business in a foundation where your business will be solid and where your business won't fail. This is like some good stuff. Y'all better tell me this is some good stuff, because um, I feel that it is. Now, the last one, and we're done. The last one is you need to set you a budget calculator. If you're not a good numbers person and you don't know how to do Excel, go online and find like a little budget calculator. It's so easy. They will help you walk through. It'll actually prop up and say, okay, what's your goods, what's your services, what do you expect, and it will help you actually do your budget. But be budget minded every month. Be budget minded. Think about your taxes. Think about your planning. Think about every dollar. Think this: every penny counts. Do not, I'm telling you, do not allow yourself not to track your money. And then what happens is, this is what I do. Oh, I thought that was going to be like this. So I make the changes. And so then the next month, what you want to do is get reality. You want to go from what I think it should be into what I know it should be. Take yourself from guessing to actually knowing. You know, when you watch Shark Tank, or what they say, if you don't know your numbers, if you watch restaurants, whatever it is, they tell you, do you know your numbers? Do you know how much it costs you every month to run your business? Do you know if your business is making any money? Well, this is how you would know. So I hope this was good for you. You can always call me. You can always call Better Black Small Business Association of California and talk to Selena or Lena or the doctor. They'll refer you to me if it's necessary, but they have this excellent financial tools. They care about your business. So I hope this was able to help you. But and I believe I covered everything. I think it was thorough. And just look at it. Spread the news. Show this workshop to your friends and spread the news to everybody. So Selena, is there any questions or anything that you'd like to ask me?
Yes, Nikita has a question. She said, what percentage of your
Okay.
profit do you put in for the next month column?
Okay. So you are fading in and out. Could you say that again?
What
What
percentage of your
percentage of
profit
profit?
do you put in for the next month column?
Well, what I do is I use whatever the last month was, and then I change it as it goes. But basically, the percentage of profit no is based on whatever you anticipate your expenses. So it could change from month to month. So one month, a lot of times it looks the same, but then if you have a lot of variable costs, then the profit will go down. And then when you don't have the variable costs, the profit will be go up. So the profit part, you can't fill that out really. You can guess what you think it's going to be, but then you have to go back and change it after you get real numbers.
Okay. Okay.
Mm-hmm.
I have put your contact information up. Pastor K is not only the tax queen, but she's also, you have a bookkeeping service. Tell us a little bit about that.
Yes. Yeah, I have a bookkeeping services where we go and we provide bookkeeping and profit and loss we give to our clients every month so they can see where they at. They can, we do a lot of this work for you, but most of the time it's from the prior month. So your budgeting is for the current month. We do the bookkeeping and let you know what the actual amount was from the prior month. And our services are between 125 and 150. Now, 125 is typically just a special, so we can do that for this month, but it's normally 150 a month. and we provide those services to you. We also have payroll services where we can do your payroll, and the payroll service includes um, doing your 990, doing your 940 and 941, sending it to IRS, taking your taxes out, doing a W-2, filing with EDD, doing your unemployment. So we do that. All that services, that's also 150 a month. So you can call us if you need it. Inbox me. We have a number of clients, and we love serving everyone. And so we provide a variety of services, not only tax services, but bookkeeping services.
Awesome, awesome. So I hope everybody was able to get a lot out of this. If you want a copy of the Excel sheet that I did while Pastor K was actually walking through how to build a budget, you can inbox us at BSBA. I think it's BSBA-CA. Lena will put it in the chat, or you can call the office or email us, and we'll get that information to you. Thank you for spending time with us. I know you are busy and traveling, but I really appreciate you. I know our small business community appreciates you. And with that, have a great day. We'll give you back the rest of your day. Thank you so much.
Okay. Thank you very much, everybody. BSBA is the bomb. Love you guys.